New York Stock Exchange has been a hub of financial activity for over 2 centuries, attracting some of the brightest and most ambitious minds from around the world. Each day, thousands of traders across the globe engage in intricate dance of buying and selling, hoping to turn a profit and secure their place in the financial world. However, only a few select trades will ever be remembered as truly historic, the kind that inspires awe and admiration for generations to come. In this video, we've detailed the top 10 biggest trades of all time, and these trades will truly leave you drooling. Let's dive right in. Number 10, George Soros, pound for pound. In 1992, George Soros, a Hungarian-American investor, made history as the man who broke the Bank of England. Here's what happened. You see, Soros noticed something fishy in the UK economy. The country's interest rates were super low and inflation was sky high, making it a ticking time bomb for a financial meltdown. Soros believed that the UK joining the European Exchange Rate Mechanism, ERM, would only make things worse by further weakening the pound. So he came up with a daring plan to short sell the pound. But he wasn't going to play it safe. He went all in and shorted a whopping $10 billion worth of British currency. It's like throwing a giant boulder into a pond and watching the ripples spread out. The massive selling pressure that Soros unleashed sent shockwaves through the financial markets, causing the value of the pound to plummet like a rock. It was a bloodbath for the pound, and the UK was forced to leave the ERM, causing a massive political and economic uproar. But while everyone else was panicking and drowning in their losses, Soros was chilling and raking in the profits. He made a cool $1 billion from this trade alone, which was more money than most people could ever dream of making in their lifetimes. Soros instantly became a Wall Street legend and a master of financial universe. Number 9, David Einhorn, a true activist investor. You might have heard of Einhorn before. He's made some pretty bold bets in the past, but the trade we're about to discuss is arguably his most impressive feat yet. So let's set the scene. It's the early 2000s, and Einhorn is just starting out with his hedge fund, Greenlight Capital. He's got a lot to prove, and he's not afraid to take risks. One day, he's heard about a company called Allied Capital. Now, Allied Capital was a business development company. Basically, they invested in other companies and earned a return on their investment. Sounds pretty harmless, right? Well, Einhorn didn't think so. He dug and discovered that Allied Capital was doing some pretty shady stuff. They were overvaluing their investments, hiding losses, and generally cooking the books. So Einhorn did what any good hedge fund manager would do. He shorted the stock. And not just a little bit. He went all in, betting against the company with everything he had. But he didn't stop there. Einhorn also took his case public, giving a speech at the IRA Sohn Investment Conference, where he eviscerated Allied Capital and exposed their fraudulent practices. The result? Allied Capital's stock plummeted and Einhorn made a fortune. Some estimates put his profit at over $100 million. Not bad for a trade that started with just $900,000 borrowed from his family. But that's not the end of the story. Einhorn wasn't content with just one big win. He set his sights on an even bigger target, Lehman Brothers. At the time, Lehman Brothers was one of the biggest investment banks in the world, but Einhorn saw something that others didn't. He saw the company was deeply flawed and that its top management was making some serious mistakes. So once again, he shorted the stock, and once again, he took his case public, speaking out about his frustrations with Lehman Brothers and warning others to stay away. And once again, he was proven right. In 2008, Lehman Brothers filed for bankruptcy, the largest bankruptcy in U.S. history. And Einhorn made another fortune, this time estimated at around $60 million. Number 8, Paul Tudor Jones, calling the crash. Ever heard of Paul Tudor Jones? He's one of the most famous names in finance, and he made a prediction that shook the world of stocks. In 1987, he predicted that the stock market was going to crash, and he bet against it heavily. But what's so special about that? Well, Jones wasn't just a regular investor. He used technical analysis and charting to make his prediction. He looked at patterns and trends in the market to see where it was heading. And boy, was he right. On October 19, 1987, the stock market crashed and Jones made a fortune. He made over $100 million in just one day. That's more money than most of us will ever see in our lifetimes. Number 7, David Tepper, all business. As the founder of Appaloosa Management, David Tepper is renowned for his keen eye for spotting investment opportunities. His bread and butter are distressed bonds and stocks, which he invests in when they're at their lowest and sells when they're at their highest. But what really made Tepper a financial rock star was his genius move during the financial crisis. While many investors were bailing out of the market, Tepper saw an opportunity and made a bold move. He invested heavily in bank stocks. Tepper's timing was spot on, and he bought these stocks when they were dirt cheap. When the market recovered, he sold them off at the highest possible price, raking in billions of dollars in profit. That's what we call a masterful stroke of genius. Number 6, Marty Schwartz, the Pitbull. Let's fast forward in time when Schwartz was already a seasoned trader and his expertise had earned him the respect and admiration of his peers. That's when he made what would become one of the most epic trades ever. You see, Schwartz was no stranger to taking big risks, and he's always on the lookout for new opportunities. That's how he stumbled upon the deal of a lifetime, an opportunity to trade oil futures at the CME. Now, we're not talking about just any oil futures here. We're talking about millions of barrels of crude oil worth billions of dollars. And Schwartz didn't hesitate for a second. He knew the risks were high, but he also knew the potential rewards were even higher. So he poured all his resources into this trade, betting everything he had on the price of oil going up. And boy, did it pay off. Within days, the price of oil skyrocketed and Schwartz's profits went through the roof. He made more money in one trade than most people make in a lifetime. Number 5, John Arnold, the nat gas blow-up. Want to get inspired? Then take a listen to this incredible story of how John Arnold, a former energy trader at Enron, made a fortune by being fearless and seizing an opportunity that others were too scared to take. After Enron's collapse, Arnold found himself with no job and no money. But that didn't stop him from pursuing his passion for energy trading. He set up his own hedge fund, Centurious Energy, with his own capital, and it paid off big time. Today, Arnold is a billionaire, but his greatest moment came when he made a move that would go down in history. You see, back in 2006, Einhorn Advisors, a hedge fund that was known for taking big bets on energy, made a bet on natural gas prices that went horribly wrong. The fund lost a staggering $6 billion, and it looked like they were going to have to close their doors for good. But Arnold saw an opportunity. He knew that the natural gas market was still valuable, and he saw that Einhorn's portfolio was now available at a fraction of its original value. So he decided to make a bold move. He bought up a significant portion of Einhorn's natural gas portfolio. But it wasn't just any buy. Arnold negotiated the deal over a weekend. While he was on a hunting trip with some friends, when Arnold returned to work, he had a massive new portfolio that would change his life forever. His hedge fund made a fortune, and he became known as one of the most daring and successful traders in the industry. Number 4, Jesse Livermore, the boy plunger. Jesse was a man who loved to take risks, and his biggest trade was no exception. He had been watching a copper company for a while and believed it was due for a major rebound. He put all his faith into this stock and made a trade that would go down in history. Jesse's trade was so massive that he bought a whopping 200,000 shares of the copper company, which at the time was worth around $10 million. To most people, this would seem like an insane gamble, but Jesse had a gut feeling that he was onto something. The stock ended up skyrocketing, and Jesse's bet paid off big time. In just a few weeks, he made a staggering $3 million. That's enough to make anyone's jaw drop, and investing methodologies still hold up in today's market. Number 3, John Paulson, big bets, big money. John Paulson, an investment genius and graduate from the New York University Stern School of Business, saw something that nobody else did. He saw the potential in gold when everyone else was skeptical about investing in it. But he didn't just stop there. He went all in on his conviction, putting his money where his mouth was and betting big on gold. And just like that, the gold market skyrocketed and Paulson's investment paid off big time. It was a bold move, a daring risk, but one that would go down in history as the biggest trade of all time. Paulson became an instant millionaire and gained the reputation of a financial wizard. But that wasn't the end of his story. Paulson went on to make even bolder moves by shortening the housing market and buying bank stocks when nobody else dared to. His bet paid off and he made millions. He wasn't afraid to take risks, and that's what set him apart from the rest. Number 2, Jim Chanos, showing Enron who's in charge. Jim is no ordinary investor. He's known for selling stocks short, which basically means betting against the company's success. He made quite a name for himself by plummeting companies like Tyco, Boston Market, and MCI WorldCom into the ground. But perhaps his most famous bet was when he decided to short Enron, one of the largest energy companies in the world at the time. Jim had noticed some serious problems with Enron's accounting methods, among other things, and decided to take a chance on betting against the company's success. Now, at the time, Enron was riding high. Their stock price was soaring, and everyone seemed to believe that they were unstoppable. But Jim knew better. He had done his research, and he was confident that Enron was heading for a fall. So he took a massive short position on Enron. In fact, it was one of the biggest short positions ever taken, and as it turned out, he was right. Enron's accounting methods were found to be fraudulent, and the company's stock price plummeted. Jim walked away with a massive profit, over $500 million to be exact. That's right, $500 million. It's no wonder that Jim Chanos is considered one of the greatest investors of all time. Number 1, Kyle Bass, shorting subprime. We're going back to the year 2007 when there was a man named Kyle Bass. He wasn't exactly a household name, but that was all about to change. You see, Kyle was a portfolio manager who had a hunch. He saw that the housing market was getting a little too crazy. Prices were skyrocketing and everyone seemed to be getting in on the action. But Kyle thought something wasn't quite right. He started digging into the numbers and what he found shocked him. It was mortgage-backed securities. Now, these were financial products that were supposed to make investing in housing easier, but Kyle saw that they were being sold to people who couldn't afford them and that the whole system was built on a shaky foundation. So, Kyle did something radical. He decided to bet against the housing market. He put his money where his mouth was and shorted those mortgage-backed securities. People thought he was crazy. After all, the housing market had been going up and up for years, but Kyle was confident, and he was right. The housing market crashed and Kyle's fund, Heyman Capital, made a killing. In fact, it's estimated he made over $500 million from that one trade alone. Kyle went from being an unknown portfolio manager to a hero of the financial world. He had seen what others had missed and had the courage to act on it. These men will always be remembered as the men who saw something that nobody else did and dared to bet big. And that's what being a true investor is all about. Taking calculated risks, having conviction in your decisions, and having the courage to act on them. Which of these trades did you find the most intriguing? Let us know your answers in the comments below.